Well, we are taking a look at stocks higher across the board this morning. The Dow up about 45 points or 0.1%. The NASDAQ, the outperformer here, up about 0.6 of a percentage point. So really seeing the energy, financials, and material sectors leading the way higher here on the S&P 500 as well. And that index hovering just near a record high. Well, this week is the week to watch for first quarter corporate earnings. We have the mega cap tech stocks like Amazon, Apple, and Microsoft all on deck. Not to mention a Fed meeting and the first print on first quarter gross domestic product. Here to break it all down for us is Amanda Agati, PNC Financial Services Chief Investment Officer. And Amanda, today tech stocks are a bit higher ahead of their earnings results. We saw Netflix last week show some signs of slowing momentum and payback after a record 2020. I'm wondering what you're expecting to see from these reports and some of the tech and software companies' results after what had been such a strong 2020 during the pandemic.
Well, we actually continue to believe that the fundamentals for the tech stocks in particular, and even communication services too, just continue to be really, really strong. The fundamental story there really led the charge over the course of last year, and we don't really see it meaningfully slowing in a significant way. Pockets of it here and there a little bit. But we continue to think, even at this somewhat earlier inning or early stage of the reopening here, that story will continue to be important in terms of market leadership. If we look at the whole S&P 500, the earnings growth expectation for this quarter is a massive 30%. But I think what's really notable is that 2/3 of that growth rate is likely to come from both financials and tech. And so it does speak to the strength underlying tech fundamentals, whereas we're still seeing pretty significant, if not challenging, negative growth declines out of the more cyclical areas like energy and industrials as well. And so I think it's an important reminder that we are #not out of the woods yet, that this is not a broad-based recovery, and that we've really seen sentiment rally in anticipation of a full reopening. We're not quite there yet. And so I think that will be really important in terms of gauging the success around Q1 earnings season. What do the results look like? But perhaps more importantly, what does the path forward look like, especially as it relates to guidance?
And when we talk about headwinds, obviously, to use your #not out of the woods yet, when we're talking about tax hikes potentially here, corporate tax might be weighing on, next year's earnings. Talk to me about what that looks like, given we're at, as you point out in your note, forward PE of 22 times forward earnings here. I mean, what does it look like in terms of valuations if we do see taxes move higher?
Well, that is absolutely starting to become part of the market narrative in our view. We've been saying all year that the minute this starts to come back into the equation, it's going to put the brakes on a whole series of things. And so based on what we know today, still very early stage, but that initial proposal shows corporate tax rates going to about 28%. So not all the way back to 35, which is certainly a sigh of relief as it relates to markets and market participants. But even still, if we were to get to that 28%, it has the potential to shave off about $12 per share for S&P 500 earnings next year. So said a little bit differently, it has the potential to cut the growth rate for next year in half. And that is a doozy. That's not really a haircut. That's more like a buzz cut as it relates to earnings growth. And so you're absolutely right. With the market sitting at about 22 times a forward PE, it's certainly not baking in any expectation for that tax hike story to come to fruition here, but we think that is going to become a part of the story. We don't think necessarily that 28 is the number, but I think it's helpful to frame it out from kind of a worst case scenario perspective. Our base case is that it falls somewhere in the middle, and so perhaps not that buzz cut that I just shared earlier, but a haircut nonetheless. And we really need to see a meaningful acceleration in earnings growth and positive revisions to keep this market rally fueled, and the corporate tax increase story is not going to help.
And Amanda, I also wanted to ask about supply and demand mismatches, because we've started to hear a number of companies, as well as the Fed, of course, in their beige book, talking about this, both in terms of supply chain issues like the chip shortages and in terms of finding qualified laborers. And I'm wondering if that presents a risk to the markets in the near term, and if so, if that's been priced in adequately.
Oh, absolutely. It's part of the story. It's funny to say that we're not all that focused on Q1 earnings results in and of themselves. Like that's kind of an unusual thing to say, but we're very much focused on the guidance story, to your point. What are companies saying in terms of rising input costs? Where is the inflation? Is it transitory, or is it something that has more longer lasting effects? And ultimately, what does that do to margins and profitability? And then, of course, our company's starting to anticipate any changes on the corporate tax side. What does that mean for guidance over the balance of 2021 and also 2022? It really is much more of a forward-looking story. So while we get really fixated on Q1 results here, we really need to zoom out and see what does that rate of growth, that trajectory of growth look like, and what are those key variables? I frankly think that the input cost story is critical to it, but we do think that is very much transitory. So an impact over the first quarter or two here, and then things will start to subside a little bit. But we don't think that that is baked into current valuation levels at all.
All right, PNC Financial Services Chief Investment Officer Amanda Agati. Haircut or buzz cut? Appreciate you coming on here to chat all market stuff with us here. Have a good one.